So welcome everyone. Saturday evening, 8 o'clock, we put up the series of a financial education for everyone to have the awareness. There's so many solutions available for you to manage your finance. And today's agenda, we will like to share with you three things. Number one, what is Rrsp loan? Second one, can Rrsp loan build retirement income faster? Then how Rrsp loan works. So of course, at the end, we have our Q&A. Feel free to ask any questions. What is Rrsp loan? It is called so-called leverage accounts. Before we go there, we just like to quickly remind all of you, now is Rrsp season. Before the end of February, everyone who have Rrsp loan still would like to get the money back. And it's a good time to contribute to Rrsp. All right. Very quickly review what we learned 2 weeks ago. We say this is really for the purpose of retirement. Depends how far away from your retirement age. It could be medium-term or long-term investment. We can open an account in any financial institution. And when we contribute to the Rrsp, you do need to have an advisor to guide you to create a suitable portfolio. Of course, when people say, well, they would like to buy the home, put a down payment, $35,000 take out from Rrsp will be tax-free, but it need to be repaid within 15 years after. Lifelong learning plan, also, you can take out $10,000 out from your Rrsp, and then you need to repay 10 years. So those are the two options when you withdraw the money from Rrsp without tax, okay? And then, of course, if there's emergency fund needs and take out the money other than those two plans, and that will be taxable, okay? And then where to find the Rrsp contribution room? Go back to CRA website, My Account, or you have a paper notice of assessment available. Usually on the third page, they will show you your Rrsp deduction limit for this year. And this is the amount that you can contribute, the maximum. And we say why we need to create our own individual Rrsp. The main reason is that we could not rely on government for our retirement because the government QPP, CPP, OAS all together after tax pretty much maximize this like a government pension and only just got about like a $1,500. It's far from enough. Just consider the pricing of all the food and also the inflation. And for the company pension, and a lot of people don't hold a job for a long time. They jump from one job to the other. So it's not that stable either. That's why we say, well, we do need to have our individual Rrsp. We can also create wealth account. That would be next month's topic. And of course, last week, we talked about tax-free saving account. Those are the investment instruments to help us to create our own pension. So we will have a strong stream of income after we retire. Quickly review the payroll. A lot of people say, well, where my money goes? My boss told me I will have a $60,000 as a gross salary. But at the end of the year, I just feel like I'm always tight with money. Why? Because there's a loss of source deductions. So this is the source deduction in Quebec. From the employee side, people see the pay stub, they will be able to find that the tax deduction, the obligations, after that, they wouldn't have much net income, right? Of course, employer, they also have the obligation to help you to pay those like obligations. Then without any planning, let's say this person is not aware of Rrsp, and then say he earned $60,000 last year. We can see that the tax only to the government, $5,600 to federal and $7,000 to provincial. Of course, there's another close to $4,000 obligations like EI premium, QPP, QPIP. Then the total tax will be $16,500. After tax is much less than you earn as a gross salary, right? Average tax rate 21%, marginal tax rate 37%. This is quite high. So that's we always advise people, when you have a RSP contribution room, why not to get some tax refund? So let's look at this person. Let's say he accumulate 10,800 RSP contribution room. When he put into this RSP savings, then we can help this person to save income tax $4,000. And this is pretty much, we help this person to create extra 1 month net income, right? And the money you save is the money you earn. So we review already what is RSP. Then now you say, wow, a lot of people also tell us, I know the strategy is quite good, but at this moment, I don't have 10,800 in my bank account. And how I'm going to implement this strategy? So that's the question we would like to answer for our clients. And we will do this step by step. Number one thing, we can help you to borrow 10,800 from the bank. And second one, we say, well, we can open your investment account if you don't have one. Then we will put into the financial institution that we partnership with, and then we create a portfolio for you. To create a suitable portfolio for every person, of course, we need to understand the investor's profile and know our clients. Then we have this engine to save for our retirement. That we can help us to say, well, I would like to make sure I will have a sufficient retirement income, right? Later on, I'm going to show you how this money can grow for you. So what's the RSP loan? We say, well, there's a tax implications. Now it's a tax season. A lot of people think, oh, I pay so much tax. The strategy help me to defer or save income tax, right? So RSP lending strategy, this is a financial strategy that can, for the right investors, achieve their retirement saving goals sooner by making a larger initial investment and maximizing the tax deduction for the savings. The investor can maximize the time their investments are in the market, increasing potential return over the time. So we know there's a time value of money. If I can invest early, and my money can work longer and harder for me, right? This is also a way for investors to grow their portfolio faster than traditional savings alone, because you are leveraging. You borrow money to invest, you are leveraging other people's money to help yourself to make money. This is also a supplement to existing goal-oriented savings or pension plans. So RSP loan can be a suitable tool to help with retirement saving goals or to supplement government or company pension at retirement. So earlier I showed you the government pension is not sufficient. The company's pension is not that stable. Now you have your own pension plan. Of course, we need to share with you the potential risk for RSP. Because it's a leverage account, we need to exercise this with cautious. Number one, it will magnify potential loss as well. It can magnify the gain. On the opposite side, also will magnify the potential loss. While RSP loans have the ability to accelerate gains, they also have the potential to experience magnified market loss, depending on how the investment performs. Although the long-term nature of RSP and the tax refund received may offset short-term market fluctuations. So we do need to look at the timeline of this strategy. Okay. Number two, the debt obligation payments, because it's borrow money, right? We always need to pay back the principal and the interest. The borrower, also the investor, are required to repay the loan, including interest, regardless of the investment return, and could impact cash flow. Of course, there's a limited access to credit. If you take out this portion of loan, it could limit the future access to credit due to outstanding debts. So we do need to help our clients to have a holistic planning so they will be able to exercise this strategy, but still keep the well balance with their investment. And why RSP loan? This is really a good strategy to help us to build retirement income faster. The benefits. Number one, income tax savings or tax refunds through deduction of RSP contribution from taxable income. For example, the example I showed you earlier, if I don't put 10,800 into my saving, and I won't be able to get 4,000 tax refund, right? So you can get the benefit right now this year. Income earned within an RSP is a tax deferred, allowing investors the opportunity to build a portfolio without the worry of tax consequences until income is drawn from the plan. You know what? Without taking out the money, there's no tax implication, right? So let's say now I'm 20 years from my retirement ages. So you can defer your tax 20 years. All capital gains and distributions are tax deferred. Withdrawals are treated as income. There's no preferential treatment based on the source of income. What does that mean? It means that at the age of 65, I'm starting to take out, let's say, $5,000. They will charge me 15% tax. Usually we call it withholding tax. Why? Because for last 20 years, I have such a capital gain. We can have a dividend. We can have interest. But whatever the amount we take it out, we will count it as that year's income. Okay. So the benefits, it can help us to increase in the tax refund. Our client can receive a substantial increase in their tax refund by deducting a higher contribution from their taxable income. So the example I show you, yes, you put this like a RSP loan into your portfolio, and then you will have a 4,000 tax refund. Number 2, tax deferred growth of investment. Our client can benefit from significant tax shelter growth in their investment from their substantial contribution, right? We say, well, 20 years, the government will not bother you, say, to file your income tax for those growth in your RSP, right? Only when you withdraw the money that will trigger the tax. Access to funding. Our client will be provided with funds that they would not otherwise have access to. So this is more like we can help them to borrow the money, right? Disciplined savings. And our client will adopt a disciplined saving strategy as there's an obligation to repay the loan. So just like any loan or any like a mortgage payment, usually we were very disciplined, right? Number 5, contribution room maximization. Our client can also catch up on unused contribution room in order to accelerate savings in their plans. So you pretty much like magnified the gains. Now, some people are quite visual. I would like to show you how the strategy works in terms of this diagram, okay? So we say the whole purpose is to build our retirement income faster. And let's say this person borrowed 50,000 loan. And then right away from day one, he can put this 50,000 into his investment. So we create a portfolio suitable for his profile. Then along the year, let's say 26 years later, this person's 50,000 can grow up to 227,000. Of course, the 50,000 we need to pay back along the years, right? We also need to pay back the interest. Let's say 50,000 loan, principal plus interest for the 10-year payment, altogether is 69,202. Then you see the difference. For me, I'm not using my own money. 50,000 pretty much is borrowed, but I'm using some people's money, whose people's money is the bank's money, right? And the financial institution's money help me to gain 3 times. This is the net gain for myself. So this is the great way to accelerate the retirement saving. And now also I would like to compare with the RSP loan and with RSP loan. What's the difference? On the left-hand side, let's say, well, this person never start to save for retirement. And there's no saving in the personal RSP. And he's only relying on the government pension. And from now, we already can see into the future, maximum you can get $1,500 per month after tax is not much like sufficient for the retirement, right? When there's no enough income for the retirement life, and then if there's any healthcare expenses happening, they might not even have the money for the healthcare expenses, like unexpected expenses, right? And very sad, many people, they retire, but they still need to find a part-time job because they need to, make the ends meet, right? So we don't want to see that happen. We really want to help every family, every person to have a good retirement life. Then we say, well, we can start to implement RSP loan, this strategy. We can start to save today. We say there's a time value of money. The money to grow is just like the tree to grow up, right? We need time. And right away, we got a lump sum of money in the RSP. Then supplement income, we can build beside the government pension. And when we have a more cash flow, then of course, we will have a better lifestyle, right? We are not tied with our money. And when we build this more income for our retirement life, we can also set aside some emergency funds for healthcare expenses. Of course, everybody deserves a better retirement life. So this is why we would like to share with you. Here is a solution available for every family. And let's look far down on the road. Let's say after age 65, let's say I can live 25 more years. How much money I need, right? Let's say if the person already built up a investment portfolio, 200,000. And then if the person live for the next 25 years, and every year he can take out 15,000 as a supplement for his retirement. Of course, why we suggest to have the RSP loan, the reason is that if the person said, well, my lifestyle is like I need 35,000 per year. I need 45,000 per year. And then, or some people say, well, I need 60,000 per year for my retirement income because my expenses are there, the bills are piling up. And now you say, well, how we can help people to boost up their retirement portfolio, like a double, triple, or even quadruple. And now a lot of people say, well, I don't have this like a 20,000 in my bank. I don't have a 10,000 in my bank. Then RSP loan could be a very good strategy. And now, so how RSP loan works? For this, we do say, well, we will help you and guide you do it step by step. And in this RSP loan strategy, you do need to have a good financial advisors because it's not just like I open an account, I sign, okay? Because everything need to tie in. And also we need to say, well, what is the best suitable solution for you? And it need to be making sense, right? In the long run. So let's say the same client scenario we showed you earlier, where to get this 10,800 to contribute to RSP. Because I want to have an extra 4,000 tax refund this year, okay? And then we say, number one, we borrow the money from the bank. So we submit application online. Then we also say, well, if you already have RSP account, that's great. If no, we open a new RSP account for you. The money we borrow can directly transfer to this account. The suitable portfolio is really according to a person's profile. And who is suitable clienteles are the person are in growth and aggressive portfolio because we need to make sure the rate of return need to cover the financial expenses, which is the interest, right? And then we do this for long run. Why? Because like a short term, you can see the fluctuations of the market, but retirement is a long-term saving, right? So it's very good for the long-term saving plan. And now we just show you some examples. Our B2B bank, one of our business partners. So for us, we can help you to implement this strategy, not just limited to RSP. Now it's because we only got 1 month to implement the strategy for RSP tax saving, right? Of course, people say, well, I have a lot of tax-free saving account. The loan, the room is still available for me, but I just don't have the money. And I also would like to use the strategy that we can help too. And of course, investment lending, like an investment account, non-registered account, if you would like to deduct the interest from your investment, and that could be the suitable strategy, right? And so from here, we say really talk to a financial advisor because we have so many organizations, partnership with the banks, like a B2B bank. We also, this year, we're starting to do the Rrsp Loan with IA Financial Group as well. So we can open an account for your investment, and we apply for the loan. Then when the loan is approved, the money would directly go to the financial institution select. For example, IA, BMO, Equitable. And then through those organizations, we can help you to select so many funds from a very well-known financial institution. For example, like a Franklin Templeton, Invesco, AGF. You can also have a very good funds that's exclusive sale through our business partners. So that is our strength, is really to give you the right strategy, give it advice, and also we help you to implement step by step. And then here, I will always like to show you the big picture. We say this is a long-term investment. You don't look at the, the short term, because short term, the market will fluctuate, right? And this strategy is good for long run because you say, well, when you do the investment, like a growth investment, here is the curve. And it always will be able to beat the inflation. And also for the interest rate, you can cover the interest rate. So that's why we show you the long-term strategy. It can work well for you. Then we say, well, what's the rules help me to grow money? We always would like to share with you rule of 72, because Albert Einstein say this is the 8th wonder in the world. So this is how investment works. Why we say Rrsp loan is suitable for growth portfolio, let's say 12%, because your money double, let's say every 6 years. That help you at your retirement age. You have quite a big lump sum of the amounts saving up for your retirement, right? And it's not suitable for conservative or balanced clients, portfolio clients. Why? Because the interest rate, if you cannot cover interest rate, that doesn't make sense, right? So that's why I would like to show you who are the suitable clienteles. You are willing to take risk. And of course, when we help you to save the money, we will put it into the segregated fund. So what are the benefits of a segregated fund? You will see when you have a bull market, we help you to protect your principal. And also those years, the gains in your principal, in your investment, we can also reset the guarantee value. Let's say the person put into 100,000 at the age of 40. The next 10 years, his portfolio grows up to 140,000, and we can reset the guarantee at this amount. Let's say it's quite unlikely the next few years is a bear market. Usually we wouldn't see that such a long bear market, okay? This is just an example, like extreme cases. Say, well, at the age of retirement, for example, the market crash. Then you say, wow, the market value only give me 75,000. For all those years, no client would like to suffer this loss, right? But because we put it into the segregated fund, we give the maximized protection 100. And then you see, if the person need to really take out all those money, he can only get 75,000. However, the insurance company will be able to top up the difference to pay you extra 65,000. So your guarantee value, 140,000, will be transferred into your bank. All right. So this is how it works. So we always say, well, this is a strategy, have a risk, but we also help you to say how to minimize your risk and still make your retirement looks brighter and better. Okay. Again, here we would like to share with you our business partners in Canada. We have bank, BMO, B2B bank. We have all the investment company institutions that we can select very good like funds from there. Then we also have Aon, who is the largest broker in the world to protect the assets like a car and home and commercial insurance. Then we also protect people's health, their life. And we have IA, Equitable, Manulife, La Capitale, Forester, Ivari. Those are our long-term partners in Canada. So if you say, well, I would like to have many choices, I would like to explore the market to find the best solution, and feel free to talk to us. All right, so that is all we would like to share with all of you. Here's my contact information, and our team members also will be able to access you. If you would like to know more about us, worldfinancialgroup.com is our official website. Okay, so that's all I would like to share with you. And then we will open the floor